It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat. It's not wrong, and it's certainly no different today than it's ever been. 1901, 07, 29, 1937, 1974, 1987, Jesus, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves. We just react. And we make a lot of money if we get it right.
Welcome to Market Makers, everybody. I hope everybody had a fantastic weekend. This is the market update. The crypto update's a separate video. It will be out right after this one. If you want to look at the timestamps in this video, you'll see everything line item there for the timestamps. Guys, if you enjoy the content, be sure to like and subscribe. Click the hype button. We'll see if it does anything. And if you want to join us, click the join button right there on YouTube. You can also support us. Check out the video description. Let's see where we are. I'm recording this in the last half hour of the trading day. So it's just after 3:30 Eastern time. But what you can see with the red day that we're having in the markets, it's all right here. WTI. You had oil up as much as 10%. It's up 8.5% right now. You've had it up as much as 10%. Why? Because of the kinetic action that took place over the weekend. Things were heating up again with Iran. Therefore, ergo, you have oil spike up, but also oil was very oversold. It was oversold on the RSI. You don't have a big volume day on oil. Look, I think this is ephemeral. I look at this, you see your gap fill at 84,250. Could you come up there? You're at 78. Of course you could, right? Can you come up there, find resistance, and see what happens here? Look, I can't tell you. I'm not a cartoon chicken. So I can't tell you what the leaders are thinking in Iran. I can't tell you what Trump is thinking in the White House, but I can tell you just common sense. Politically, they want to keep oil prices down, right? So I'm looking at this as contained market action. I also look at this from the perspective of the markets when you're talking about prices and you're talking about 80% of money managers this year underperforming the market, a 5-year high. They have, They have a motivation to be buying any dips. So that's something we need to consider. Now, remember where we are psychologically in the market. We just slipped back into fear today. We were all the way up in neutral. I guess the week before last, we were almost in extreme fear. So take all this into consideration, but this is your decline right here. And as we talk about declines, understand where price is right now. It's 1.5% from a new all-time high, right? So you wouldn't know if you went on YouTube and looked at people's thumbnails. You would think this is World War III and we're going to have nuclear obliteration. That's not the case, guys. If we want to look at what the markets are doing, why I've been predicting this since Q1, these targets, we had 7,000, 7,500. Both of those were hit. Gave you those of April of last year. And then I said we're going to rally out into July. Again, we just look at the charts. Go back to 2023, rallied into July. Correction 10 to 13%. 2024 rallied into July. Correction 10 to 13%. 2025 rallied into July. All you got was a pullback, 3.5%, because it was the strongest turnaround rally in history. So what do I think is going to happen again? We're going to rally into July, right? So we're in July right now. It's a question of, do we top with earnings or do we top shortly after earnings? When we look at the fractal, how it's played out here, I've showed you guys this the last couple weeks in a row. This predicted exactly our target, 74.92. We got up to 76.25. You get your pullback, and then you go up. And here it's predicting 7,900. Now my targets vis-a-vis Fibonacci, 7,800 to 8,000. And then what happens? 10 to 13% decline. It's going to put you back around 7K. Once we get this decline and come back down, and again, when this happens, people will tell you the world is ending, the dollar's collapsing, Japan's collapsing, everything's collapsing. It's not the case. 2027 is going to be generational gains going into 2028. You don't have to believe me. I've been right since last April. I'm not saying that as a flex. I'm just giving you a point of fact. Go back and look at the videos. The cycles tell you this thing is going to heat up come November of this year out to summer of 2027. You're going to have some epic gains, and you're going to see that in the cryptos as well. If we look at this on the S&P, again, here is our W pattern or W fractal, as well as our compression triangle. You broke out, you're coming back down again. But overall, we don't know what's going to happen with Iran, but I anticipate this because the market will key off of earnings. Earnings are supposed to come in north of 20%. Now, remember, last quarter, they were predicted by the street to come in at 12%. They came in at 28%. So they're supposed to come in north of 20%. The psychological question is, will those earnings, even if they come in strong, 20, 24%, is that enough to keep the market excited? Or is that people saying, oh, that's it, that's the peak, we're going to sell? We know, cyclically speaking, we're looking for a July top. Mid-July, late July, we've done both options. So we have the banks kicking off tomorrow. Those are supposed to come in strong, those numbers as well. So we'll see if that gives a bid to the market. With so many money managers underperforming the market, a record 80%. That is a high of the last 5 years, have not performed as well as your grandmother investing in the S&P. I think there's going to be a motivation to buy any dips, but this is holding up very well. You have support 74.92. Obviously, all these different fractals 74.30. You have support. What you also have is just series of higher lows, higher low, higher low, higher low. And each one of these guys, remember, was the end of the world every single time we pulled back or sold off a few percent. We could be topping, but I think the bias is to go up here into mid-July, late July with earnings, right? And then I can't tell you what the earnings are going to be because I don't know. Nobody knows. They guess. So if earnings disappoint, that can easily mark the top. Earnings keep coming in strong or stronger than the last quarter, you're going to keep pushing up. My prediction has been 7,800 to 8,000. That's what I'm sticking with, right? So I'm going to stick with that. We should see that some point here in July. If we look at this on the Dow came right up to 200%, 53,502. You're currently at 52.5 right now. Could that be the top? It could be. By that, I mean, you start looking at patterns. Can it come back up, make a double top and fail? It could. If it punches through, I'm looking at 54K. Dow's been on a great rise, and now it's chopping sideways on the daily time frame. Look at the NASDAQ. You look at all your time frames, daily, 3-day, weekly, monthly. Everything is bullish on the NASDAQ, and we came up to the targets, hit the targets. So let's look at this zoomed in on a daily pattern. Not a big breakdown. You're down 2%, just north of 2%. Again, about 20 minutes left in a trading day right now. You're down about 2%, 650 points. You're at 29,242. You have your low right here. What was that low? That low was 28,722. So again, you're still above that 500, 600 points. So you're looking at this pattern, and if the NASDAQ starts breaking down, where's your support levels? The same place they were, 28.4, and you have this number over here, the 28.7, 28.4. Those are your key support levels, and you're just chopping around. Tech's getting beat up. You have money rotation going on between chips and different sectors, but this is nothing except a lot of volatility and chop and compression. And this is really just about bias. Do you think we're going to have strong earnings? Market's going to want to get bid up? If you do, and you think we're going to follow the seasonal pattern of rallying into mid or late July, then you think it's going up. 31.8's the next level. If you don't, and you think everything's falling apart, then you need to take out 28.4 and go to the downside. Let's look at this on the Russell as well. Russell came right up to target, 3,035. I got to 3,050, and now you're back at the 18 on the daily. It's what you're bouncing off of right now, 29.48. As I'm recording, you have support down here, 2,900 as well. At a bare minimum, you just talk about market patterns. At a bare minimum, you will see some type of reflexive rebound, right? You'll see the Russell come back up. It'll either flip 20 or 33,050, or it won't, and it'll make a double top. And that's when you look at your trend line, your moving averages, your trend flip. That's when you start looking at that for a breakdown to possibly sell off. If it goes up with earnings in the broader market, then you're going to be looking at this pushing to the upside, going more on towards 32.42. We don't know yet. We have a down day. We have oil spiking up. We have trouble in the Middle East. We'll see how it plays out. You look at the DAX. Here's our German index for our European friends. I like to trade the DAX too. You have a series of higher highs in trend. You have a series of higher lows in trend as well. And now you're chopping sideways in the same corridor you've been in. We tried to break out of the trading range. If the US markets do go up with earnings, I anticipate the DAX going up as well. Those targets have been and remain 26.4 and 27K. You're currently at just under 25K. So those are the targets for the rally to the upside if we do get that breakout. If we look at the SOX, because everybody's telling you the SOX is going to collapse, it's been a parabolic rise. Now, one of those two things is definitely true. It has been a parabolic rise. You're down about 16% right now from the current price action from your peak at 14,655 to where you are today. You're down 16%. You have support down here at 11,763. You're at 12,302. And then you have support at 10,869. These are all possibilities. You can come down, you could come down further, retrace some of this. This would be a 50% retracement off of that pump if you get to 10,869. So we'll see, because the narrative on Wall Street has been dump the chips, go into the Mag 7 because they were beat up. That's been the narrative. Let's just look at some of the individual chips real quick. We have NVDA was on a nice little pump, and now it's giving some of it up. 203 is the price. You have support at 200, and you have support at 191 down here as well. You could get some more chop. Overall, very bullish on NVDA going into 2027. But remember, we're looking for our market top and then a correction. I don't know how deep the correction will drop NVDA. Let's see what it does as far as do we get any more upside before we start looking at downside. Reason being, we're trading with the mathematics in the market. Look at AMD. AMD doesn't seem to know there's a bubble in chips because it's holding up really well. 584 is your peak. You're at 534, and then 495 has been a support level. Beneath that, 435. So these are your key support levels on AMD. Right now you have chop in a range, and you're right about that mid-range. So watch how AMD does. But again, I mean, there's no denying these are parabolic moves, right? So we'll see if the chips can hold up while we get earnings coming in, or if we see further rotation and the chips start breaking down. Ultimately, with the market correction, you may get AMD down to 388. It's at 535 right now, so that'd be something to look out for. It says your 54 RMA, and that's also the base of your gap defense there. If you're looking at that from that perspective, you look at Intel. Intel's been selling off 102. You have support at 98 and 91 are your next two key levels. Always look at your larger patterns that you're making. You have a false break double top here. If you come down below 98, definitely watch 91.49 because you have the 54 RMA there as well. And you're at 102 right now. So watch this area, see if you can hold up at 98, bounce off of it, try to stay in this upper echelon. If not, you could have some deeper pressure coming in. Look at ARM, just another one to look at. Found support right at 292 at the 618. Beneath that's 266. You're at 299 right now. And those are next key levels, and then 249 beneath that, right? So you're getting volatility in these chips because you got to remember where they came from. Look where they came from. I mean, ARM just February of this year was all the way down. What was that price? Can't see if my picture in the way. This was all the way down here at about, what, $99, and it's at $300, right? Even right now, with the sell-off, it's at $300. So I just want to watch these levels because post-market correction, looking at some chips, looking at some memory stocks, those are things that I'm looking at after the July top and market correction. Tesla, you're just chopping. You still have your W that you've been forming, which is turning more into a compression pattern now, a spiral. This is going to resolve to the upside or the downside. We'll see which way Tesla wants to go. You're at 392. You have support at 368. And you have support down here at 337. So if you keep chopping, watch as you get to the apex because you have to make a decision. Are you going to rally up or break down? And if we look at this from the earnings perspective, that is what, July 22nd. So again, a lot of earnings are going to be coming in. Big tech's going to be the one to watch, specifically the Mag 7, right? And SpaceX. People are asking me about this because SpaceX has been selling off. This is a 1 hour time frame. You guys know I don't trade on this time frame. It's all we got because it's all the candles in SpaceX. But I had downside targets here vis-a-vis Fibonacci. First level is hit at 140. 1618 is at 131. And then you have 121 beneath that if this continues to push down. But ultimately, with the market correction, I'm hoping to get some deeper selling in SpaceX, because with the math and the marketplace, you could see SpaceX at $100 with an overall market correction. So this will be something I'll be picking up for the long term, as I've been talking to members about. Once we get the market correction and then see what SpaceX does. We don't know, but this is the math on the current chart for SpaceX. Hope you guys enjoyed. Crypto video is out after this, and see you in that one.